Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today again we will take a look at the euro currency. Actually, guys, today I thought maybe we should take a look at the Great British Pound, because pound recent time shows very bright action and it's falling to our target. But then I have taken a look at it, and in fact, guys, all that we have said on the Great British Pound in the last video research, weekly research that we have prepared, this is still valid, including the targets and the other moments. So currently our target on the cable is 145, and market stands very close to it. Probably it even will be hit on the beginning of the January. Within the couple of weeks, I think that it should happen. And then I decided to postpone the analysis of the cable on a later time. So maybe we will prepare it in the January, but not today. Today we will take a look at the euro currency. Also, guys, I suggest you to read our weekly research, because there we have taken a look at the longer picture on the monthly charts and the weekly, and also we have taken a look at the euro currency through the prism of the dollar index. We have made some parallel analysis, at least on the high time frame charts, because on the monthly and weekly chart of the euro currency, they a bit more blur compares to dollar index. Dollar index has clearer picture, and this clearly led us to understand what to expect and what the chances of the different scenarios that we have on the euro currency. That's why I think that will be very useful for you if you will take a look at the weekly research. Also, we have calculated the new pivot points, the annual yearly pivots for euro currency. That's also very important levels, and you somewhere should keep it. So because it will be very, very useful and very important levels for our analysis in January. We will start from the daily chart, and here just we have to make some acknowledgement that based on the high time frame analysis, guys, our bearish expectation on the euro currency has been restored. And we think that recent action that we've got within the last week is probably was impact of the insufficient depth of the market, because many traders who hold the bearish positions have left the trading for holidays, and that why market was standing on the impact of the insufficient power that should drive market in the normal direction. But this hasn't happened because just the reasons of not sufficient liquidity or poor liquidity. So traders who in fact should push market lower with the opening new shorts have taken rest, and that's why this downward action has been frozen for some time, and that has brought the math in overall analysis, since from the technical point of view, the action that we have seen in intraday charts, we have discussed this, was looking not really bearish, and was a bit warning sign for the bearish scenario. But suddenly, on the 31st of the December, as you can see, the dollar has taken the lead again, and this drop was very nice, and this returned back the overall normal picture, normal behavior for the markets. But not only this reason why we think that the bearish scenario has been re-established, also by the moments that we see on the high time frame charts, and especially on the dollar index. Still, guys, despite the fact that market has turned back to the downward action, we also have prepared some, let's call it, conservative trading plan for those of you who would like to avoid standing in the whipsaw action while market stands between these extreme points, between this top and between these lows, and who would like to make the bet, who would like to make the stake on a definite direction, where direction will be confirmed. Maybe it will be at a bit worse price, but since as upward potential as downward potential is significant, if even market will move beyond these extreme points, either here or here, this still will have the significant potential in the direction of the breakout. That's why we have prepared conservative plan for trading for those of you who do not want to take activity inside of this range and who prefer to trade on the high time frames, and for those of you who would like better to wait a bit and get the a bit worse entry point, but more reliable situation, more reliable direction of the market already, will choose the direction and start action with it. For other traders, guys, who would like to take the part inside in mass that stands inside of this range, we will discuss some interesting moment here. First of all, on the daily charts, you can see bullish pattern, bullish grabber has been formed here. This market dropped lower, and also market has started action down to the neckline of our pattern. So our major swing to trade here, as we have marked 2 weeks ago, is still valid. And it still stands as our major swing to trade, at least on the daily chart. So at the same time, could we clearly say that market is not able to form the butterfly here to the upside? Probably not yet, because the validation point stands right here. But taking in consideration whole analysis that we have made and the picture that we have on the high time frame charts, and even we'll take a look at from the Napoli point of view, we have the bearish setup. That's why our conclusion, mostly just my opinion, is that the appearing of the butterfly here is possible mostly theoretically. But on practical point of view, based on technical indicators and patterns that we have, well, it's more probable that market will start continue action to the downside. That's why those of you who would like more action with trading, we will try to play some setup on the while market stands inside of this range and on this our major trading swing. On the 4-hour time frame chart, guys, as you can see, this is our head and shoulders pattern. Here, guys, we probably this action that this particular has brought the mess in our analysis and has made us to announce some doubts on the perspective of this head and shoulders. We should write off on poor liquidity, I suppose, because finally here, guys, we have the acceleration that we should have with the slope of the right shoulder. Acceleration down here, and you can see inside of the head, right slope on the head, we also see acceleration. This is the good sign. Also, guys, take a look that the top of the shoulders almost equal, so almost perfect. So the one difference is in the time. So this is shorter shoulder compared to this one. It's more extended, but again, due to the holidays eve, this here was less activity of the traders who has to push market lower. That's why this was a bit. You can take a look at it. Takes more time to form right shoulder compared to this one. Well, that's why. But right now, as you can see, market is dropping. Trend also is bearish here. Take a look. It's very interesting that the neckline will coincide with the very important levels. This will be the monthly pivot point and weekly pivot support one. And this will have additional importance for us, because imagine that if market will break this area, what will happen? It simultaneously will be great confirmative moment for the bearish trend, because market will shift monthly sentiment bearish, and by breakout through the weekly pivot support one, it will tell us this is not just a retracement within the bull trend. Breaking the weekly pivot support one will tell us this new bear trend or continuation of the long-term bear trend. Simultaneously, this could trigger the head and shoulders action, and we will get first target as the ABCD pattern to the downside. That's why it's very important. At the same time, guys, you can see that weekly pivot point stands slightly higher than the market is, and we could try to play this setup. So on the hourly chart, take a look that the weekly pivot will coincide with the nicely looking confidence resistance 109.05 or 908 confidence resistance area, and that will be the lower border of this previous consolidation, rectangle consolidation. So this will be very nice resistance that we could use for taking the short position. That's our major setup in the short-term perspective on the common week, on the euro currency. One thing that we should escape to avoid is such short direction to the upside. We do not want to see this just single candle to this area, and we do not want to see the gap up open right in this area. In this case, it's better to skip the entry. If we will get some gradual action, it could be fast but not explosive. In this case, we could watch for a possible short position here, taking the short here. Stop could be placed differently, so depending on the scale that you're trading in. So if you trade on the weekly chart and you would like to follow the weekly stop grabber, if you will read our research, you will see what I mean. You probably should place stop above the 110.50 area. It's this invalidation point for a weekly grabber. If you would like to trade the hand shoulders, then you probably have to place stop above the right shoulder. It's above the 110 area. If you would like to take just a short-term setup here with trading to the downside in some intraday target, then probably you could place tighter stop. But guys, I think that stop should be placed at least above this area, above the 618 resistance, because if market will break the confidence and return back in the consolidation, it means that probably it will break it, because consolidation usually prevents, forces market, struggle market to protect this area from the price returning back inside of it. If this will happen, the market will pass through the weekly, through the confidence, return back in the consolidation. What chances that just a simple 618 resistance will hold market from the further upward action? This area must be much weaker than this one. That's why it will be sufficient stop. Also, guys, do not forget about the moving stop to the break even. We intentionally using the very strong resistances to utilize in our favor the strength of these areas and technical response of the market to these areas. So if market will reach it, we could count on some bounce down. If even we will become wrong later, market return back up, we will use this bounce to move our stop to the break even. Because if we were right, then market will continue to move lower. If we will be wrong, market return back up. In this case, we just lose nothing and we will shift trade to the riskless. That's why it's very important. Do not forget to manage your open positions. Do not abandon it. Don't drop it without any controlling. So, that being said, we mostly think that currently EUR mostly has the bearish sentiment, bearish setup. And here is our short-term trading plan. Let's see how it will turn.